This is Quan App here. In this video, I'm going to investigate the SSL indicator using the scientific method. Uh, but first of all, we need to make a few observations. We look at the charts, ask ourselves some questions, form a hypothesis or a testable explanation. We make a prediction, and then we test the hypothesis, right? We test the hypothesis. Before we get into that, let me just show you the charts. We're here. Let's see the charts and make an observation. Okay, this is the SSL indicator. This is the water. This is the water atom explosion. So what I'm trying to do is code this simple strategy. We code it and we automate it and test it. That is the objective of this playlist video or whatever. So when looking at this chart, what I noticed that with these trends, I'm saying this is, if I could catch this, I would definitely make a lot of money. And the problem will be here, but you sell here, you buy here, you sell here, you buy there, you sell here, you see if you catch this whole trend. So this is the volatility 50. Let's see the volatility 75. Same thing. We sell here and we hold until we get an opposite signal. We buy here, we sell here. So let's see. But on some markets, it's very choppy, so it doesn't work for all markets. So that's why we need to test. Sometimes it works, sometimes it doesn't. So we just need to get the statistics of that, the winnings, probability versus the losses, the drawdowns, whatever. We'll get to that, right? Okay, let's see a different market. These were derivatives from deriv.com. Yeah, man. I like them because they're volatile and they're easy. They're way easier than the forex market, right? Looking at the forex market, this is still the SSL indicator. So what it does is, I think it's a trend following indicator, but in no-nonsense forex terms, we call it a two lines cross, right? We use it as a confirmation indicator to confirm the trend, right? So let's see another chart, same thing. Oh yeah, let's see another chart. So we're gonna test it for various time frames, right? Usually nonsense forex they use the daily chart, but here we can do whatever, right? We can test all the trend frames. We just try and be profitable, right? We can adjust the rules and make them our own. So yeah, so this is the SSL indicator. That was the SSL indicator. So the SSL indicator is a combination of two short-term moving averages, right? The indicator uses two simple moving averages, which are applied to the high of the price and the other. I can't read. The indicator uses two simple moving averages, which are applied to the high of the price and the other to the low of the price. Those two lines, we call them the bear and the bull line, and then forms a channel that follows the price. As you saw, it can be used in trend following or mean reversion systems. The idea is to trade the crossovers. Trading rules. So this the idea is to trade the cross when they buy. We saw that. We saw that. So let's look at the code just to confirm if those calculations are correct. So no, I'm here. Let's look at the SSL indicator chart. This is the code for the indicator, right? So usually when we quoting the when we're coding the EA in the next video, you'll see we're gonna need these parameters, right? But first of all, we need to make an observation of how many buffers are there, right? The indicator on the chart, these are buffers. Buffers will help us collect these two prices, right? Yeah, I'll call them prices or data or whatever for these two lines. Okay, so the indicator has three buffers, but it uses two buffers to plot, right? One is the bulls, bears, one and the other is the bulls. So yeah, man, let's look at the calculation, right? You can see that HMA high So I don't know if it's the moving average, but it's a moving average. It's a moving average which uses the simple. The method is the simple moving average, right? Okay, there are two moving averages here that are defined. The other one is for the high prices and the other one is for the low prices. You can see here it's applied to the high of the prices and the other one is applied to the low of the prices, right? So we just need to understand that. And another thing we need to understand, all we need here is just the buffers, buffer number. Okay, here set index buffer. So we're gonna be using buffer 0 and buffer 1, but we'll get to that in the next video when we're calling the E8. So I just wanted to highlight that a bit. So let's see, this is just the intro. This is just the intro. Let's see. Okay, so the objective here was just to introduce the chart and the trading rules. So in the next video, wait. So this information that I shared here, I got it from this dude. His name is Sofian Kaba. This is the blog. Oh no, this is the title of the blog, and then this is the link to the blog. Right. That's where I got this information. So that we don't plagiarize this work. Even if you plagiarized, but let's give him credit. So you can also do your further reading. So yeah, I mean, this will be a 5-part series. So in the next video, I'll be coding the indicator. Right, I'll code the indicator to automate it, and then I'll do preliminary test and determine if we do need to add a filter like like yeah, like this maybe, because when we're looking at this, right, we don't want to take every trade. You see here could have been a winner. We can observe, by eyeballing we can see that this could be a winner, but here we definitely see that this was a loss, right? So we need some sort of a filter to filter in places where there is no volume or no volatility, or when the market is choppy, or however you define it. Yeah, so that's what we're going to be doing in the next video. And then in the other video, when the thing is finished, when we finish coding here, we just do some test, maybe just in sample, out of sample test, and then we add our filters. So here we need to collect the results, and so then we can use it to compare it with other indicators that we'll be coding and testing. Right, we'll be collecting results here, but just out of sample, no. And then here, then this is new. This is what we're trying to accomplish by becoming a quant, using scientific methods to verify your results. Like things like hook forward analysis or Monte Carlo simulations. They help us determine the statistical significance of our test or results, right? Meaning, uh, whatever parameters that we have, will they be able to predict the future? Will they still work in the future? And then we also need to be careful of over optimizing, or they call it overfitting, right? So I'm new to these concepts, and so I'll be learning and sharing what I learn along the way. So I'm definitely no expert. So the idea here is not to teach, but to share what I'm learning along the way. So I hope I gave you value in this video, or I'll give you value in the next video. So please like and subscribe, and then look out for the next video where we code the indicator. Thank you. Cheers.